The European Central Bank announces its decision on interest rates on Thursday. Economists seem to be fairly sure that if the ECB does anything, it'll be to start the tightening process by cutting the amount of money it's currently putting aside each month on its bond buying programme. That's currently 60 billion euros. Chris Beauchamp is with us now, and your thoughts on this. We have spoken about this before, and it certainly seems like momentum is beginning to collect in the corner of the fact that the ECB will do something, and possibly with this reduction in the amount of money it's putting into the market.
There has been a growing expectation. The ECB has been very cautious on announcing this potential taper, but it seems to be signalling that you may get some kind of decision this week. I think the mantra here is lower for longer. Now, and that's not talking about interest rates, which has obviously been the key of the last sort of 10 years of lower interest rates for a longer period than we thought. In this case, it's more QE over time, but less per month. So the ECB is looking to sort of give with one hand and take away with the other, if you like. And that's in order to try and reduce the disturbances within the market, people getting too concerned that they're withdrawing stimulus too early.
One has to be mindful of the fact that the last print of inflation was still only 1.5% for the Eurozone as a whole. Yes, we know it's higher in Germany, but it's a lot lower in a lot of other countries. And the ECB has this average of 2% or just below 2%, doesn't it? But not much, far below 2%. And 1.5% is a substantial distance between where we are now and their inflation target. And one wonders why they would even think about the process of beginning to tighten when inflation is still that low.
Oh, I suppose the ECB's view is that they don't want then inflation to overshoot that target by too much. So perhaps by stoking the fire, but not by as much as they previously did, they can then moderate that rise in inflation so it gets to that 2% target. This is very much, it's difficult to read the runes at the central bank at the moment. I think Draghi would like to keep going with stimulus longer than some of his German counterparts on the committee. So I think he's having to balance this one at very different demands on the ECB's policy outlook.
Yeah, so one has to ask the question then, what's now built into the markets? As I say, there's growing expectations they're going to be doing something. You've got the euro-dollar chart up. How should we look at this in terms of a trading opportunity?
Well, usually the expectation of reduced stimulus would be a bullish thing for the currency, bullish for the euro in this case. You have seen it really unable, though, to push above this 118.50 area over the past couple of weeks, that 50-day moving average flattening out there. What has been a very strong rally for the euro this year from the lows of January up into the 121 almost at on the day of the last ECB meeting. So there's a sense that caution in the economic forecasts is beginning to weigh on the euro, and that maybe the fact that they extend QE into 2018, further in 2018, indeed in 2019, will continue to be the main thing pushing the euro down for the time being.
Yep. Okay. All right, Chris, thanks so much indeed. Looking at the possibilities and the options that are available to the European Central Bank, it makes that decision at 12:45 p.m. UK time this coming Thursday, and 45 minutes later, 1:30, we'll be taking a look at the press conference and working out just what it is that the European Central Bank has at its longer-term target.